G'day guys, Scott from FatB Trader here, just bringing you a quick update on the natural gas trade we placed last year in August. Now, last year in August we identified a bit of a pricing disparity between effectively what the market should have been priced at and what it was priced at. It's obviously substantially underpriced from my perspective at least. And, you know, it was due for a repricing. Now, there was obviously, this was pre-winter, post our winter. Obviously, since that time, this ABCD pattern has completed. That completed quite quickly, and we initially got our B target, then we got our C target, and then we actually got our A target as well. Now, obviously, there's been a very, very cold winter in a number of places around the world, and that's driven demand, much higher. Now, also too, I want to draw your attention to a number of technical factors which I believe will continue to push this market higher. So first of all, we'll just load this up. This is actually showing you, so you can see there we took this around the 320 mark. I think we got filled at 324. It's currently up around 440, 447, 441, whatever it is. It's gone a fair bit higher. So let's head over to the weekly chart for a moment. Same contract, just on the weekly chart. What I'm looking at here is, if we zoom out a little bit, this market has obviously rallied through and broken this both short-term resistance and longer-term resistance on the downward slope. Now, from my point of view, that's fairly significant. You can see there was a little gap actually in here when that resistance level did get breached. But you can also see substantial volume coming in here. Now, typically when you see big levels of volume like that, that's typically your professional investors and your hedge funds either getting out, selling you their you the retail trader, the average retail trader I should say. Basically this is retail prices here. I actually think though, from a technical perspective, this is presenting some very, very interesting setups. So despite the fact there is quite a lot of volume here now, what you can do, if you got in this position with us back in August, you could potentially, sell half your position, obviously bank that profit, which is fairly substantial, or you could let it run. But what I'm actually looking at doing is, for people who didn't get into the trade, there is a position, a possible entry zone in this level here, around the between sort of 440 and 420. You may even see it get down to fill that gap at 412. So I'm thinking from a longer term perspective, if you do want to actually add or scale into this position, down here at these levels is probably not a bad place to do it. Just keep an eye on the volume. Obviously this is pretty interesting when you start seeing a lot of volume like that coming in. It's can be due to obviously expiry, but it also can be due to the instos or the big boys selling out their positions to retail traders who then get pummeled basically. That being said, I believe we've broken the 4-year low, broken to a new 4-year high basically. I wouldn't be surprised to see the price come off a little bit in the next few days. But from my point of view, we've actually got another ABCD pattern forming here. So we've actually got from this low, bang, bang. Now, trading view is a bit funny with my mouse. So here, right. Righto, so from my perspective, this is the setup we're actually looking at here. Now, having a look at this here, I'll try and extend this out. I'll keep the levels at the same level here, But what I'm thinking is we're going to at least see this 618 level. I'll just make that a bit darker so you can see that. So I'm thinking we'll basically come down, we'll get a bit of a retest on this level here. Righto. So I'm thinking it's going to come back down here, retest this level. This will be your entry zone, guys. I'll keep an eye on that for people who are potentially looking at taking a trade with us or scaling into that position with us, and then basically pushing through to the initial target of around 470. Let's call the 618 470 just to be on the safe side, and 570 for the 100% extension. Now there is a couple of levels that we need to be aware of. Obviously, there is that gap level there, which we've talked about, levels of support and resistance back here. If we have a look left, there is a structural high back here at the 618, or approximately the 618. There's also a structural high point at this 100% level. So just these are things to keep in mind. Look, there's also one at the 7. So this is really basic stuff, guys. It's like support and resistance 101. Long story short, guys, I'm thinking we're basically going to see a push up either to 470, that's our initial target. 570 is the secondary target. Let's look at, say, a long position, picking it up somewhere in this band. Okay, I think you're going to have a fairly tight stop on that to make it worthwhile if you're going for the initial target. I would propose potentially, somewhere probably a 30-cent stop. Potentially, you've got an upside there of basically 14%, which is quite nice. To the longer term target, say 35% upside there to the 570 target. So we are talking about futures, and futures are, obviously highly leveraged. So just be careful. Don't load up too much. This is a longer term trade. I mean, this could take until, if we're looking at the time sort of extensions, this could actually take until, not 216. It couldn't take, I don't think it'll take that long, but it actually could take until sort of August this year for that secondary target to be hit. And this short one, we might see it hit by March, but again, it's a longer term trade, so just be careful because you are going to have to hold these trades for a while, and if you're going to have to take a minimum of one contract on these. If you're trading with, let's say, FXCM, you may be able to take a position, like a fractional position on this through their natural gas CFDs, which will give you the opportunity to obviously take less than a full contract. The only downside with that is, like futures, you've got to roll your position every month. FXM will just close your position out. So that hope that gives you some insight into what I'm thinking on that natural gas trade, guys. It's been a cracker so far, and I can't see any reason why it wouldn't continue to go higher at this point. We've still got quite a bit of winter left in most of the world, or at least the other hemisphere. And look, if you look back at potential price highs in the past, I mean, this thing's been crazy in the past. Righto, guys, that's it for now. I hope that all makes sense. If you've got any questions, just shoot me a message, and we can discuss it further. Really like to get your feedback, so leave a comment below. If you find this video useful, please retweet it. Share it with your friends. Obviously, we're trying to get the word out there on what we do, because going really well from a trading perspective. We've just been smashing it out of the park. It's due to me actually sharing my trades that I'm trading so well, to be honest, because there's no place to hide. You can't hide your bad trades, so you've got to basically cut them off. You don't have a choice, because otherwise you'll end up looking like an idiot in front of you guys. So definitely help my trading, sharing. So please share our stuff and help us be even better. Till next time, guys, trade well.